Hello and welcome to another episode of the Mark Moss Show, where we talk about the decentralized revolution. We're talking about the world changing before our very eyes. And of course, I try to bring to you each and every week, some of the latest breaking news, some education to change the way you think about things, and some exciting guests. So you don't just have to hear from me all the time. It's important to get different perspectives. And I want to talk about some of the latest breaking news this week that's driving not just the markets. And the reason why I like to look at this through the lens of politics, finance, and technology is you really can't separate the three. You can't separate the three. Politics and economics are tied to each other. The drivers of the economy, it shouldn't be this way. I don't want it to be this way. I want it to end, but it is what it is. With investing, the saying is that you don't invest in the markets as you think they should be, as you want them to be, but rather as they are. I'm on a mission to separate money and state. The state should not be using money for politics. Money is money. That's my life energy. I save that. But unfortunately, we're in a very political environment. And today, I didn't want to get into this rant, but I'll talk about it for a second. Today, here we are facing midterm elections next week, and you have politicians out there basically trying to buy votes. So they have their own agendas. There's all types of measures and things that they want to put through, rules, regulations that are on their own agenda, but at the same time, they're also buying votes. So, for example, the Student Forgiveness Act, or whatever they're calling it, it's a way to buy votes. Every time they hand out some sort of a favor or some type of money, that's a way to buy votes. And it doesn't matter which side of the aisle you're on, red or blue, left or right, doesn't matter. No politician will ever get elected promising to repeal that or take money away from you. And the problem is that it creates massive problems in our world, in our economy. You cannot create money from thin air. You can't just print money. You can't just create money from thin air and give it to people, because all you do is create more problems. They've printed, because the government cannot stay within their means, because they're constantly spending more than they bring in through tax revenues, then they are constantly spending deficit spending, as it's called. You hear every year we have to raise the debt ceiling again. They have to take more and more debt. And so they're literally paying for your college or for your house, or now to subsidize your electricity bill, your gas bill, or for whatever, fill in the blank. And they're doing that by taking on more debt. When they take on more debt, it expands the monetary system. When they expand the monetary system, it causes inflation. What inflation really is debasement. Your dollars buy less and less goods. The reason why everything gets more expensive is because the existing dollars in existence buy less and less goods. So it's great that they're trying to do nice things. It's great that they're helping people out through difficult times. It's great that they're offsetting people's crazy electric bills or gas bills. They need that help. We need to help people. But why are the gas bills and electricity bills so expensive? Oh, that's because it's the government, because they printed so much money. So it gets into this doom loop where they expand the monetary base, it debases the currency, which means the prices of goods and services are more expensive. Now, because things have gotten so expensive, they have to help people with those expenses. Now, they do that through creating more money, which then makes the goods and services even more expensive. Then they have to help them even more, so they have to print even more money. It's a very, very dangerous situation, and we could sit here for days or weeks or months talking about all the ways it destroys our society today. Let's just take our health, for example. The number one cause of death in the United States is heart disease. And that heart disease is being caused by what you eat, the garbage you eat. And that is because of the monetary system that we have today. That's probably drawn from some crazy straws, right? Mark, what are you talking about? You're saying that the monetary system is cause of heart disease? Yes, I am. And the reason why is because As they continue to create so much money, it debases the money, makes your dollars buy less and less, which then means the price of goods goes up. Now, if you make food, you have to deal with all the price of your inputs going up. My grain went up, my processing went up, my delivery, everything went up. And so in order to offset all the price of everything going up, me as a business, I have to figure out how to make things cheaper. In order to make things cheaper, I then sub out good quality stuff for cheaper quality stuff. Instead of using real sugar, I'll use any of the other 100 variations of sugar today, which are all worse for you. Instead of using real butter or lard or fat, I'm going to use all these seed oils. And I'm doing that to offset the inflation that's being caused by the debasement of the monetary system. And voila, now we've made all this horrible food that is now killing people, literally. So, yes, it breaks down society. How else does it break down society? Well, what's the number one cause of divorce? Money problems. So because the cost of goods are going up so fast, I can't keep my head above water. My wife and I are constantly fighting over money, we get divorced. Or because 50 years ago, it would just take one person in the household to work, and you could achieve the American dream. You could own a house, you could own a car, etc. You could have kids, the whole thing. Now, two parents have to work in the household. So that means now they're both working and in relationships. You either grow together, you grow apart. And so now people are working in separate fields. The kids aren't being attended to. The household's not being attended to. You still can't keep your head above water. You can't take vacations. You grow apart, you fight, and then you get divorced. Now we have, kids growing up in one-parent households all over the country. The numbers are going through the roof. And it all goes back to the monetary system because the government prints too much money. Now, the reason why I say this is because here we are going into this election cycle, and knowing how bad this is, knowing how it destroys the very fabric of our society, it ruins our health, knowing that, we should try to get back off of that somehow. We should probably try to get back closer to a budget. But the problem is when you're overspending all this deficit spending and now you need to spend less to get back on under a budget, that means you have to cut something. Unfortunately, some spending is going to have to get cut. But what? Which spending gets cut? And it doesn't matter. It doesn't matter which spending it is. Someone's going to be unhappy about it. And so which politician is ever going to come into power saying we're going to cut spending? None. No one's ever going to vote for that. The only way you vote for them is if they promise to give you more money. Like, well, let's just forgive all the student loan. It sounds great. Sure, let's vote for it. But at what cost? At the cost of expanding the debt, expand the monetary system, or debasing the monetary system, or more inflation. The Inflation Reduction Act is a perfect example of it. They name it the Inflation Reduction Act to reduce inflation, but how? By printing a bunch of more money, which is the problem that caused it in the first place? You see the insanity here. And so here we are, like I said, going into the midterm elections, not talking about which side of the aisle. In my opinion, both sides want to print more money, both sides. Maybe the Republicans want to spend a little bit less than the Democrats do, or maybe they just want to spend it in different places. In that regard, when it comes to monetary policy, they're both as bad. They both want to spend more money. Obama spent more than any president before him, Trump spent more than any president before him, and Biden spending more money than any president before him as well. And that's the root of our problem. This week we saw the Federal Reserve, the central bank of the United States, the most powerful central bank in the world, the head of that central bank, Jerome Powell, came out and talked to the people with the FOMC meeting this week. The insanity that we all sit around waiting for a banker to come out and tell us what fate we have. Will your retirement account crash or will it hold stable? Will your house that you live in with your family, will it drop by 50% or will it go up in value? Will your business be able to stay in business because you have customers and you can afford your debt, or will your business go out of business? Your entire life is in the balance of what Jerome Powell and the Federal Reserve decides to say. The insanity of that should just infuriate you. It infuriates me. But it's the world that we live in, and we have to deal with it. And so they met this week, and Jerome Powell basically said, it's not looking good for you, buddy. I'm sorry to tell you. But we have to make you broke in order to save you. That's what he's saying. It's not that's not the exact words that he said. But they came out, they raised interest rates some more, another 0.75 percentage points onto the Fed funds rate, which is the price of money. Most people don't think about it, but you buy money. If I want to get a house, it's $100,000. I don't have $100,000. I need to go buy the money. I have to buy the $100,000 for the house. The cost of buying that $100,000 is the interest rate I pay. And the Fed sets that interest rate, and they've raised it now another 0.75 percentage points, or what we call 75 basis points. And as they continue to do that, as they continue to bring the price of money up, it continues to bring the stock and asset prices down. Now, it's important to kind of understand what's going on here a little bit, because they hate you. I say that jokingly, but I actually kind of mean it. And what do I mean by that? They are trying to bring down inflation. They're trying to bring down the rate at which goods and services are going higher. Now, there's two ways to bring prices down, right? Add supply or crush demand. And they can't print more money. I mean, they can't print more oil or more food. So all they can do is crush demand. And that's what their goal is. They're trying to crush demand. So we know this. They've said it over and over and over. And you having a job that pays you more money to keep up with the price of goods going up in services is in direct conflict with what they want. That's a problem for them. They want unemployment to go up. They want less people working, and they want more people working for lower wages. Because if your employer has to pay you more money, then your employer has to charge more money for their goods and services, which pushes inflation up. They want to crush the economy. They want to make you poor to offset the bad decisions that they've made. So he came out this week. He said a couple things. There was three things that he said that kind of got my attention. He said that, one, it's very premature to think about a pause in our interest rate hiking cycle. So, hey, we're going to keep raising rates. I know that the whole world's about to crash. I know your retirement account and your house is getting hammered. I know that 2/3 of businesses aren't able to keep up with their rent payments. I know that, but we need to keep doing more. We need to cause a recession, because if we make everybody broke, then they'll stop driving as much. They'll stop going out to eat as much. They'll stop taking as many vacations. And if they stop doing all those things because they're so broke, then eventually the prices come back down. Congratulations. We brought the price of goods and services down by making you broke. That's what they're trying to do. The second thing he said here, higher for longer. So everyone's waiting. When will the Fed get off of this? When will they pivot? And he says, we're going to keep at it. We're going to keep at it. But here's the other thing. This is what actually got me here. He said that, quote, prudent risk management suggests the risks of doing too little are higher than doing too much. So he said if we were to over-tighten, then we could use our tools later to support the economy. So what he's saying is they're not worried about breaking the economy, crashing your business, putting you out of business, losing your job. They're not worried about that. They'd rather do that because they could just fix it later. Now, that's cool for them. What about for you? Is that cool for you? If you lose your job, you lose your house, your retirement drops by 50%, is that cool for you? It's not cool for me. Now, one bright spot is Bitcoin. It seems like with all this bad news after that announcement, the price of stocks crashed, but Bitcoin seems to be holding on like a boss, man. It's like it's found this level. It's been here for a couple of months. It's right at this $20,000 level. And it seems that it's finally starting to break apart from the stock market. So Bitcoin has been trading like a NASDAQ stock, like a tech stock. It has correlation, it's called, a tight correlation. What we've seen is that it's been closely correlated with tech stocks for much of 2022, but now it's breaking. As a matter of fact, in the last 30 days, the correlation with the NASDAQ has slid to 0.26, which is the lowest we've seen since January. Now, a measure of 1 says they're moving perfectly in lockstep. So we're at 0.26, which is very low. So it's looking good. Now, it was at 0.96 in May, but now it's breaking apart. So as the Fed continues to get more hawkish, as we've seen earnings come out this week where Meta, Facebook, got completely smashed, Amazon got completely smashed, down 20% or more, Bitcoin's held on. Bitcoin hasn't gone down. As a matter of fact, Bitcoin has gone up a little bit, and the correlation with stocks is really breaking out. And what we've seen is that Bitcoin continues to overperform. We saw this week lots of news coming out with Bitcoin. One of the things we saw this week is if we look at the transaction volume, the Bitcoin annual transfer volume, and we compare it to like another payment network like Visa or like MasterCard, how much are they transferring? What's their payment volume? And what we can see is that the payment volume for Bitcoin is going through the roof. And to put this into kind of some numbers, between 2017, 18, 19, and 20, for 4 years there, it was in the $2 trillion range per year. 2.1, 2.7, 2.3. Well, 2019 it dropped to 1.9. But it was in the 2 trillion range for 4 years in a row. 2021, 13 trillion. 2022 year to date, 14 trillion. So for 4 years in a row, 2 trillion, 2 trillion, 2 trillion. And then it went to 13 trillion. From 2 to 13 last year, this year, 14 trillion year to date, probably end up over 15 trillion by the time the year is done. And so we're seeing it hold up when the markets are crashing. We're seeing it become uncorrelated, and we're seeing the network grow. That's massively bullish. It's good news in a time when the entire market is bearish. Now, we talked about how the annual transfer volume has been going up. Some other things that we can see is because Bitcoin is so much different than any other asset that we've ever seen in the history of the world, one of those things that gives it a difference is the visibility, the transparency. And so everything that sits on the Bitcoin blockchain is transparent. We can see it. We can see where the coins are, when they move, things like that. What we can see is that we can see at which price were the coins moved last. So, for example, if I bought Bitcoin today at $20,000, I transferred it to my cold storage, and it sat there for whatever, the next 10 years, then through on-chain data, we could see that this Bitcoin moved to this wallet at this price, at $20,000, and it sat there for 10 years at $20,000. Now, the Bitcoin network is not private because we can see this. It's transparent. It's not private, but it's anonymous. So what does that mean? It's not private. We can see the Bitcoin moving on the blockchain when it moved to that last address, but it's private. We don't know who owns that address, right? So it's a little bit different there. But what we can see when we look at this data is we can see that we can see how long the Bitcoin have sat there, at which price point. And what we can see when looking at a chart right now is that we can see Bitcoin is actually becoming a reserve asset. And we can say that quantitatively, not qualitatively, but quantitatively, we can see that because what we can see is that each cycle, as Bitcoin continues to mature and get bigger and bigger and bigger, the floor and the ceiling in Bitcoin have been held for the long term, 1+ years. So Bitcoin that's being held for at least 1 year and not moving is getting more and more and more. So we saw, before Bitcoin, a lot of people were coming in and buying Bitcoin. They were trading it, right? So they're new people. They've just come in. Maybe this was you. You just came into Bitcoin. You're buying it. You're selling it. You buy Bitcoin. You sell it. You buy Ethereum. You sell Ethereum. You buy Cardano. You sell Cardano. You buy XYZ token, etc. And you're buying. You're trading. Blah 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 blah. But now what we're seeing is Bitcoin that's been sitting for at least 1 year. That's a holder. We call that a hodler. They're holding it. They're hodling it for what? Well, that's their reserve. It's their savings. They're saving it for the long term. And what we can see is that the amount of Bitcoins held for at least 1 year has only increased. It's getting higher and higher and higher. And so that is super bullish, super, super bullish. And we can also see at these levels where we're at, in this 20,000 range, it's providing a base or support. So what we can see is that investors love their ability to accumulate at this cost basis. I've talked about this many times before. At this price point, in this $20,000 price point, it's under levels that would tell us it's cheap. Now, we don't know. Nobody knows. We'll never know a bottom or a top. So a lot of people, is it the bottom? We don't know until we're looking backwards and we can confirm where that bottom is. What we can tell is when things are cheap or when things are expensive. Now, just because it's cheap doesn't mean that it can't get more cheap. It can. But it's cheap right now. Anytime it's been under this level, it's gone on to be a historic buying opportunity. The last 2 times we've seen Bitcoin get to this level, we've seen it rally 1,600% and 400% off of that, and that's where it's at. It's been trading for about 5 months in this range where it's at right now. And anytime it dips below this 20,000 level, it just gets bought up really, really, really fast. And even as it's getting hammered by the Fed, Jerome Powell coming out and saying, we're going to break the markets. We'd rather break it and fix it later. Stocks are dropping and Bitcoin is holding on extremely, extremely bearish. And bullish. And of course, it's bullish because not only do we have that support, but we have all of this data. Like I said, we can see that the hodlers are gaining steam. We saw this week Fidelity, one of the largest asset managers in the world, and they've been very pro-Bitcoin for a long time, pro-cryptocurrency. And they opened up this week a waiting list for their retail crypto products. So Fidelity's been in Bitcoin for a long time. They've been mining Bitcoin, I want to say since 2016 maybe, for a long time. Then they opened it up for their institutional clients, and now finally they're opening it. Well, they've opened up a waiting list for retail crypto product. It says that according to Fidelity's website, the new product will offer commission-free Bitcoin and Ethereum trading, although it notes that a spread of up to 1% will be charged. So commission-free Bitcoin and Ether trading. So there's all types of exchanges where you can go trade your cryptocurrencies, which, by the way, I don't recommend. I spent years and years and years trading it, running trading groups, and unfortunately, most people just lose their money. And even if you don't lose your money, you could probably spend that time somewhere better off. But it's expensive. Every single time you make a trade, it costs you money, which is why there's all these exchanges that make all this money, because every time you trade, whether you win or lose, they make money. And so Fidelity, according to them on their website, their new product will offer commission-free Bitcoin and Ethereum trading, which is a pretty big deal. You have to understand, like I said, they're already one of the largest asset managers. People already have their money parked there. It says Fidelity's move to target the retail market follows a wider trend across crypto, with banking giant Goldman Sachs eyeing a collaboration with retail-focused crypto exchange FTX. So Goldman Sachs, if you don't know, which, come on, you know, but if you don't know, Goldman Sachs is, they're the most connected bank out there. Them and BlackRock, right? They're kind of one in one with the government and the Federal Reserve. And all of these banks are rushing to get in and create Bitcoin products. And this is one thing that makes me super bullish on the fact that I don't think the government, the United States, will try to make it illegal. The laws of the United States are typically made by lobbyists. And they're written by lobbyists, and then they're given to lawmakers who then just sign their name at it. And the lobbyists are made up of all different types of industry groups, obviously, depending on what they're trying to lobby. But the banking, or I should say the finance industry, is one of the largest lobby groups there is. And now we've seen Fidelity, Goldman Sachs, some of the largest financial institutions there are, bring on Bitcoin products. And in order for someone like a Goldman Sachs to bring on a Bitcoin product, they could spend hundreds of millions, if not billions of dollars with partnerships and sponsorships and staff and compliance and regulatory and all these things. And so now we have all the financial institutions that have now moved into the Bitcoin space, and they're going to just let the government make it illegal, and they're just going to lose billions and billions of dollars. But remember, who makes the laws? Well, the lobby groups make the laws. So are they going to make laws making it illegal for them to use and make money in the businesses that they've developed? I think the chance of that is very slim. Now, it's possible. Everything is possible, but it's certainly not my base case. I think the banks, the financial institutions will not be putting forward those bills. If those bills are put forward, they'll probably push back on those bills. We also have dozens of high-ranking senators and politicians that are pro-Bitcoin. And then we have potentially 25 million Americans that own it that also wouldn't be very happy and would certainly be fighting back and voting against that as well. So these are the things that make me bullish, why we won't see the government trying to make it illegal anytime soon. There's a big story that's been dominating mainstream media for a while. Probably, I think, since April or May of 2022, but it all came to a head this week. And I am talking about the world's richest man, Elon Musk, taking over, I don't know, maybe one of the largest social media platforms in the world, and that is Twitter. Of course, you know by now that Musk bought Twitter. He took possession of it last Friday. And there's a lot of information going around about that. A lot of information that I think is wrong. I think it's focusing on the wrong thing. And so what we see all over the place is it's a threat to our democracy. It's a threat to our democracy. He's going to let all these mean things be said online, blah, 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 blah. Now, why would people even say that in the first place? Well, they would say that because Twitter has been censoring people so harsh and so fast and so strong that now Musk said that he wants to allow freedom of speech. You know, that thing that we're guaranteed by our Constitution, the freedom of speech. He wants to allow people to have free speech. And so instantly it's going to become a cesspool and of horror where people are going to say all these mean things. I mean, it's just insanity. And somehow that's going to be a threat to our democracy, which is even more insane. First of all, we don't have a democracy, just so you know that. We don't have a democracy. What we have is a republic. If you've said the Pledge of Allegiance in school, like I grew up saying, then you would know. And when you put your hand over the heart and you said, "And to the republic for which it stands." Remember that. When Benjamin Franklin walked out of, I'm drawing a blank on the name. When after they signed the Declaration of Independence, they signed the Constitution, he walked out and they said, "Hey, what happened?" He said, "Well, congratulations, you have a republic if you can keep it." We don't have a democracy, we have a republic. But what is a democracy anyway? And a democracy is rule of the people, of the common people, not of the elite, but of the common people. So there's no threat to our democracy. A threat to the democracy is not allowing the common people to be heard. That's a threat to the democracy. Remember, a democracy, if you look it up the definition, I'm gonna look it up right now because I want to read it to you factually. So if we have it right here, government by the people exercised either directly or through elected representatives. So government by the people exercised through representatives. And it says the common people considered as the primary source of political power. So the common people, you and I, we're common. We are supposed to have the power. It says the principles and policies of the Democratic Party. Here. The common people, especially when constituting the source of political authority. So all political authority is supposed to come from the common people, from you and I. And in order for the political authority to come from you and I, then our voice have to be heard. And how is our voice heard? Well, that's heard through free speech. If you're censoring half of the people in the world, that's not democracy. It says here, point number 5, the absence of hereditary or arbitrary class distinctions or privileges. So this is not some arbitrary group that's defined of these elites that run these platforms, these elites that fact check us. No, it's the common people. And just because you don't like the common people, it says here, the common people of a community as distinguished, so different from any privileged class. So just because you don't like what they have to say, it doesn't matter. It's the democracy would be having hurt. Now, again, we're in a republic, not a democracy. But the fact that Elon Musk wants to allow us to have free speech, we're in a democracy is a complete scam. Anyway, that's not the point of what I'm talking about. The point I'm talking about is that, well, it sort of is, right? It's the convergence of politics, finance, and technology. And so politically, this is a very charged topic politically. It's charged in the finance because obviously it's a $44 billion deal, publicly traded company, richest man in the world, very big deal. But also technology, and that's the point that I want to get to, the real story here. I broke this on my YouTube channel. You can check out my YouTube channel, just search Mark Moss on YouTube. And I really went deep into the research on this one, and we looked at why did Elon Musk really buy Twitter? And I'm not going to go through the whole thing. You can go watch the video if you want. But you have to understand what Elon Musk said, why he said why he's buying it. He said he's doing it for humanity. But you also have to look at where he got his start. And he got his start at PayPal. And I believe that was in 1998. In 1999, his partner, co-founder, Peter Thiel, put out a video, which I used in my YouTube video, where he said that, hey, we see that the rise of internet-enabled phones is going to grow really rapidly, and we think that these internet-enabled phones will allow people to move money, and they'll be able to move money, and they won't need the government or the banks to do it. And the government and the banks, like China, he called out, will lose their power. The only way they could stop it would be to shut down the internet and the mobile phone networks altogether. This was Peter Thiel, PayPal co-founder, back in 1999, making this statement. And today, that's exactly where we're at. Smartphones or internet-enabled phones are basically at full adoption. They're at almost 90% adoption throughout the world. And we have them, exactly what he said. The problem is they started PayPal to change the financial system, but they weren't able to do it. And Elon Musk obviously sold out on PayPal, as did Peter Thiel. Also, Elon Musk and Peter Thiel originally wanted to call it X, and Musk owned a domain name X. And in 2017, he bought that domain name back from PayPal. We don't know how much, maybe $6 or $8 million or so. And he bought that name back, X. Now, when he started talking about buying Twitter, in May of 2022, he made a pitch to the investors, to the board, saying that he had an idea to bring a new product to Twitter called X that he thinks could bring in hundreds of millions of users and create billions of dollars of value. Now, what is that X? Well, my theory, my research shows is that he started PayPal to change the financial system, to change the way payments are done, because he cares about humanity. They weren't able to do it with PayPal, and they left PayPal. He went back and bought the X domain name back for them, probably with some hope of reviving it at some point to get back to his original mission, which, as he said, he bought Twitter for humanity. Maybe he got back to his original vision to help humanity through payments, and now it looks like he's assembled some of the original PayPal founders, better known as the PayPal Mafia, to come back on the board. He's also partnered with CZ. He's the founder of Binance, which is one of the largest, if not the largest, cryptocurrency trading platforms out there. And it looks like the project that he pitched to the Twitter investors and shareholders, X, is coming back. And this time it will have payments built into the Twitter platform, which could potentially free us from the banking institutions that hold us hostage over money. It looks like that's what's happening. I'm connecting the dots. Again, if you want to go watch that video, go search Mark Moss on YouTube. You can see that. If you're not following me on social media, you should check me out on social media as well. You can find me on Twitter and Instagram at @1MarkMoss. That's just the number 1 Mark Moss. I also put out a tweet thread on this as well. So if you want to keep up on the play-to-play day by day, make sure to follow me on Twitter and Instagram at @1MarkMoss. Check me out on YouTube at Mark Moss. You can see the whole video breaking this down. I have all the graphs, the charts, the headlines. I call them the receipts. And, of course, I break down some of this to you as well. You're listening to The Mark Moss Show. We break down the intersection of politics, finance, and technology. And that's what I got for you today. Thanks so much for listening.